Fundsupermart.com.
Hi, the JPMorgan Emerging Markets Opportunities Fund is a recommended fund for our emerging markets on the Fundsupermart platform. What is the investment strategy of the fund and how does it manage to outperform its peers?
Okay, the fund is structured as the best or highest conviction ideas strategy of all the research platform we have. So it combines both the top-down and bottom-up input, and the screening and also fundamental analyst research. By style, I would describe it as a value-orientated but also quality strategy. Country selection or top-down view has got more of a value tilt, but our bottom-up stock selection is driven by a lot of quality input. So when you look at the overall portfolio, it has got a value bias, but also quality tilt as well.
How much consideration is paid to the benchmark during portfolio construction?
Our approach is benchmark agnostic. So we don't own stocks that we don't want to own, although that stock might be a big stock in the benchmark. In general, the higher the conviction, the larger the position we take in the portfolio. So if a stock ranks highly from the top-down perspective, and also the stock is highly rated by our analyst, then we can take a larger position. Vice versa, if the stock is more of a trading idea, the level of conviction is somewhat lower, then we would take only a limited risk. But it's a benchmark agnostic approach.
The fund has substantial investments in China and Brazil, both of which did not perform very well recently. What is your view on these two countries and how does the fund position its investments in these regions?
Yes, emerging markets have struggled year to date, as many investors have noticed. And within that, large market cap countries, mainstream BRICS countries have suffered. So Brazil and China both have struggled year to date, especially Brazil, given that the currency has also depreciated sharply. So if you look at the returns in US dollar terms, Brazil looks even worse off. Now, what do we think about these countries? In Opportunities Fund, we are slightly underweight Brazil. We think that valuation is getting more interesting, but we want to see the government's reaction to the recent street protest in the form of policy response. We had concerns about Brazilian government's interventionist approach. So Brazilian economy has been slowing down. Their approach has been to intervene rather than letting the market to do their own work. So if we see more positive response from the government in reaction to these street protests, and become more, economic reform-minded, we'll take more positive approach to Brazil. So for Brazil, we are wait and see. We're taking a wait and see approach. Now for China, there's no shortage of negative news. You open the newspaper, it's all about what China is slowing down, where's it going to go? Non-performing loans are going through the roof. But when you look at valuation, China is trading at historic lows. So we have an overweight position in China. And we do acknowledge there are risks in China. But when you look at valuations, we think that a lot of these negativities are already priced in. We are not saying, that the Chinese banks, for example, are the best quality banks in the world. But again, when you look at valuation, they are cheap. And even assuming the worst case scenario, we don't think they would lose book value. So just weighing the negative news and the valuation, we think that valuation is telling us there is actually good investment opportunity.